The primary advantages of investing in stocks include high average annualized returns, diversification, low transaction cost, and the fact that it's a passive investment. High annualized returns. The average annual return for the stock market is 7% to 10%, depending on who you ask, what your time period is, and which indices you're looking at. It's generally understood that the annualized returns for stocks have been higher than for real estate over the past few decades. The stock market's high average annual returns look even better when you consider that stock investing is a passive activity, which does not require any of the time drain or idiosyncratic risk you face when dealing with physical real estate. Diversification. Investing in the stock market is one of the most efficient ways to eliminate idiosyncratic risk and build a diversified portfolio. If you buy index funds or ETFs, the only risk you face is general market risk, also known as market beta, as opposed to the risk of individual stocks or assets. Buying real estate, on the other hand, presents you with a large amount of concentrated idiosyncratic risk. This is because you are fully at risk if and when something goes wrong with your property. If there's a natural disaster or your tenant stops paying rent, it could take you years or months to restore your property and continue receiving rent again. Low transaction costs. Buying stocks is one of the most inexpensive ways to invest money, especially when compared to real estate. While buying a condo in New York City will cost you roughly 4% in closing costs on average, investing that same down payment in stocks may only cost you a few dollars in transaction fees. That's just a fraction of a percent. Liquidity. In addition to low transaction costs, stock market investments are also very liquid. This means that you can easily sell some or all of your investment and raise cash in a matter of days. When it comes to real estate, even the quickest all-cash sale can take 4 weeks or more to close. The average time it takes to sell a co-op in New York City from start to finish can take 6 months or more. Once you're in contract with the buyer, it still takes another 2 to 3 months on average to complete the board application process and receive the clear to close. Passive investment. Stock market investing is totally passive in the sense that you do not need to invest any time principally managing the strategy or operations of any of the companies you've invested in. This is the complete opposite for a real estate investment, where you are essentially in the driver's seat when it comes to managing your own investment. Simply buying the index using a low fee or no fee ETF will give you the average market return and eliminate idiosyncratic risk without costing you any time, headache, or hassle. Looking to buy or sell a home in New York? Learn how you can save on commission and closing costs at www.hauseitnyc.com.